Good morning all and welcome to today's video. So today I have two pairs on watch and those are dollar CAD and Aussie dollar. So I'm going to start with my favorite of the bunch and break this down for you. That is dollar CAD. So on the higher time frames, the narrative that I see it is that we have broken above a significant area here by way of this 1, 2, 3 touch structure. The second touch breaks above the first touch but doesn't tap into this area here. The third touch breaks above this touch, catches people the wrong side of the market, and then we have that completed 1, 2, 3 touch structure, and we move to the downside. Yes, we have a near miss up here, which a near miss here to this high. So this high kind of near miss to here, but these don't always have to be filled straight away. And you can see that we're clearly in a run of momentum to the downside. Okay, and we've broken below the base of this structure. Okay, and price did not find, this is the area where we would typically see either a reversal to the upside to take out this high, which we kind of near missed to here, or we would plummet to the downside. Now it's quite clear to me that price did not find enough liquidity here to send it to the upside, so therefore all I'm seeing this as here is a scoop back up to tap into. Let's get some of this, some of these drawings off the chart. A scoop back up to tap into this area of consolidation here, which you can see where I've marked my area of value. A scoop back up to tap into this area to move to the downside to take out this low, which this this low near missed to, and then potentially we may see that move to the upside to give us more of this 1, 2, 3 touch structure, which taps into this high, which we near missed to last time around. But that's the, as I said, that's super higher time frame forecasting. If I just drill down, one thing I notice here as well, you might be thinking, well, surely we've already tapped into this area. Okay, well, I've said often that these candles here, candles which look like this in particular, so when we have, although we've kind of wicked just above this area, candles which have a solid body like this and have a big wick above it, I've just seen this so many times now that more often than not, if we're going to move to the downside, these get filled. Okay, and as I drill down, if I just look at this on the weekly a second, we have the same thing here. We have one of these bullish candles here with a big wick above it. It's no surprise to me that we're coming back up. So we have the same thing on the daily. As we drill down to the 4 hour, we have the same thing again. We have a bullish candle with a big green wick above it. Okay, so the more time frames, just as with any other pattern, the more time frames that we see these bullish candles with a big wick above, the more likely it is that they are filled. So each time frame's stack in the confluence. Okay, same thing again. Bullish candle with a big green wick above it. The green wick hasn't been filled, so we have the same candle on multiple time frames, and we don't prioritize candlestick patterns. But as I said, the more time frames these things are visible on, they start to hold more and more weight, and you can see price appears to be scooping back up to tap into this area. Okay, and if we just switch to the line chart, you might be thinking, well, surely we've already have a completed reversal structure. Well, first of all, sometimes what we see when we have these completed structures is a scoop back up, a double top and a drop. Okay, we see that sometimes. And also, if we just switch to the line chart, you can see that wick there does not appear, giving me a clue that perhaps this is the second touch which taps into the first touch, which doesn't tap into the area of value. And perhaps this is the third touch which breaks above the second touch and taps into this area. We may even, just to touch on it, if that's the case, we may even get something like this, where this becomes the middle section, then we tap into it and then drop. And that would kind of, if we just switch back to this chart, that would make sense. And that would explain why price is moving down correctively, because we know these middle sections within these structures often, they're usually corrective in nature like that. And if that was to happen, that wouldn't be ready by the end of the day if we just count the candles at the bottom of the screen. But so that's the narrative as I see it. But regardless, what I'll be looking for is the following. So I'll be looking for price to tap into that area once again because of how it's moved down. That is telling me that price did not find enough liquidity where it was to push it to the downside. So maybe there are still orders that need to be tapped into, especially as we have, I don't think this is super important, but we have an area of consolidation there, which price may need to tap into. But to me, more importantly, it looks like it's just filling all of those big bullish wicks that are visible on all the time frames that we typically see being filled. And if we do tap into that area and we push back down, if we get a solid impulse down, that will tell me that the liquidity has been filled, and then the correction afterwards would indicate to me that that is just the banks and the bigger players stacking their orders, and then I would be able to manage this down to this low here as a first inflection point for something in the region of about 4%. And of course, if we kept going to the higher time frame target down there, that would be 17%. And what I would do in that instance is I would use the Falcon mechanical management system, and I would drag this Fibonacci tool, which I've customized, down to there. I would set a take profit at the 90%. Okay, at the 90% mark, and then I would be trailing my stop accordingly, as well as having this take profit there. Okay. Now, the other thing just to touch on, if I just flick to the DXY, which is the dollar index for those that don't know, so I've got an alert set just below the area of value. If it does not trigger, then I'll not be looking to place a trade. If we just flip to the DXY ever so slightly, and so it's a similar thing on the DXY. Okay, we've kind of tapped into this liquid sharp point there. This touch breaks above this touch. We tap into that area. We move to the downside. We break below the low. We scoot back up, just as with dollar CAD. What do you notice here? We have this. Do excuse me if you can hear my stomach. I hope it's not audible on the video. I intermittently fast, and sometimes I get a little bit hungry at this time of the morning. But we have the same thing here. They're more of a doji, but we have a bullish wick, a green candle with a wick above it. Okay, in this instance, we have this here. Now, if we just switch to the line chart, this is a bearish candle, but if we switch to the line chart, once again, that wick does not appear. So on the daily chart, the wick does not appear. And if we drill down to the 1 hour chart as well, the wick does not appear, giving me a clue that perhaps once again, this is just volatility, okay? And if we just look at the time, 1300, 1 o'clock, 1 p.m. here in the UK, that is typically where a lot of the, I can't remember what that was, but that is typically where US red flag news announcements come out. So I'm just sort of seeing this as potentially volatility as well. And if that was the case and we switch to the line chart, that would imply that this is a second touch, which breaks above the first touch but doesn't tap into the area of value. And perhaps we're moving up for a third touch of this kind of structure here, which taps above the second touch and the first touch and taps into the area of value. And then we could be moving to the downside, and then this becomes the middle section. Okay. So if that was to happen, then dollar CAD would likely, it kind of follows suit as to what dollar CAD is actually doing as well. Okay. And then that would potentially, if we tapped into the area again, that would potentially open the floodgates for the DXY to sell off, which would mean that dollar CAD would likely sell off as well. So they're kind of moving in tandem with each other. Okay, and that would make sense as well. So, and as we switch to Aussie dollar, you'll see the same thing, and how we can kind of use the DXY as well, again, to our advantage. So Aussie dollar on the higher time frames, we've tapped into one of the reasons this is lower down on my list than dollar CAD. Okay, so I always prioritize my pairs in order of which pair I would actually look to get long or short on if they were to all shape up at the same time. It's very, very rare that happens. I think only once have all 4 of the pairs that I had on watch provided an entry at exactly the same time. But regardless, as traders, we have to be prepared. We have to know what we're going to do if that actually happened. Okay, so if both of these provided an entry at exactly the same time, I would take dollar CAD. Partly because I shall explain in a second. You can see we've tapped into this. There was a sharp move down followed by a sharp move up. Okay, we tapped into the area and we pushed up aggressively. we've left a near miss to these highs here, giving me a clue that potentially, just as with the flip side, just as with dollar CAD on the flip side, this is potentially just a scoop back down into my area of value to take out these highs, which we near missed too. Okay, that makes sense as well. But in this instance, we notice we didn't tap into the major low here. This is not as significant as this. If we just look at where dollar CAD has come from, although dollar CAD near missed this high here, it tapped into an area of more significance. This one here versus Aussie dollar, which tapped into something which is less visible and less significant. So that's partly why Aussie dollar is lower down on my list. One of the other reasons that Aussie dollar is lower down on my list than dollar CAD is because, according to my documentation, I have a higher strike rate when it comes to profit on dollar CAD than I think any other pair. Okay, so for some reason, dollar CAD, I have a higher strike rate, higher profitability on that pair than I do any other pair. So that's another reason why this is one of the important points. This is why it's important to document. Okay, and one of the other reasons that this is lower down on my list. There was another reason. I can't think what it is at the minute, but I shall get to it. One of the other reasons is because, yeah, okay. So, right, yeah, okay. Let's short. Yeah, that's what it was. I knew there was something. It was short trades. I typically, like most of us who trade the Falcon strategy, I tend to see I tend to be more profitable on short trades than long trades. Okay, maybe that's because we see more short trades and I've trained my mind to see them better. But that's one of the other reasons why dollar CAD is lower down on my list. But how I'm seeing this, Aussie dollar is lower down on my list. Sorry. So if we assume the same logic that we've just used to break down the DXY and dollar CAD, okay, and we just switch to the line chart, you can see once again that wick is just that. It's a wick. It's a wick on the daily chart, a bearish wick. Okay, normally, if we were moving to the upside, it would be a bullish wick that we would see filled. But regardless, we can see that this is a wick on all time frames. So that is another reason why this is slightly lower down on the list, because typically it's the bearish wicks that get filled if we move to the upside and the bullish ones that get filled if we're going to move to the downside, if that makes sense. So on all time frames, you can see that is just a volatility wick. Okay, and in this instance, we don't kind of have. That's another reason why this is lower down on the list. We don't kind of have as we had with as we had with dollar CAD. We don't kind of have a second touch here, which gives us more of this, where the second touch breaks above the first touch, but doesn't tap into the area of value. Then we get the third touch. So essentially, a reversal structure. We don't really have that so much. Okay, with Aussie dollar, whereas with if we just switch to dollar CAD, we kind of have more of a reversal looking structure to it. So it's another reason why this is lower down on the list. But regardless, because this is appearing as a volatility wick on all time frames, what are we looking for from this pair? It's just kind of dollar CAD on the flip side. Are we looking for price to tap into this area? If we look at where that wick was, once again, that was at 1300 hours. That was when news would have come out. So I'll be looking for price to tap into this sharp move down here, followed by a sharp move up, giving me a clue that there's potentially liquidity there. And then I'll be looking for price to push back above these lows here, back within this structure, and then we will be trading above here and above here. Not too concerned about this high by this point, because by this point we would have rejected this once, and then we would have broken below, broke back up. We would be back above these highs, and the more lows there are, the less relevant this starts to become. Okay. And then I will be able to manage this trade. If we got a consolidation afterwards, I would look to get long on the break of the flag or within it. And then I'll be able to manage it up to these highs, this high here as a first inflection point for something in the region of 3.5 to 4%. And of course, if we got the risk entry within the flag, that would be even better. And of course, once again, if the DXY is pushing up again to fill that wick to tap into that high once again, because that was volatility. If this is pushing up and then it moves to the downside, then it's likely the Aussie dollar will push down to the downside and tap into that area and then move up. That would make sense, because that would be Australian dollar strength against US dollar weakness. So if we've got US dollar weakness, then it's likely that the DXY is selling, the DXY would sell off, because it ties in. If you look at the distance from here to here, it's the same as the distance from here to here, more or less, and the same as the distance from here to here. So that is the thought process, folks. I hope you've enjoyed this video, and I hope this has challenged your perspective and challenged how you look at the markets. Please don't use this as a signal service. As I've said, that's not a, if you don't understand this way of trading, then it doesn't make sense to just be. A lot of this comes from experience. I have a trading plan, but a lot of this comes from experience, the decision making. If you don't have the experience, then you're not going to know how to execute the trading plan correctly, even if someone does give you one, which would explain why I've had people say to me things like, "You've lost me money." People outside of the Falcon community, "You've made me money." And they've said this when they've watched a video of mine on a day when my entry criteria hasn't met. So the fact that my entry, even if they were using it as a signal service, the fact that my entry criteria wasn't met and someone is saying that I lost the money or made the money, means that by definition they haven't executed my trading plan correctly, because they've taken an entry which wasn't even an entry for me. So that's a prime example of why you shouldn't try to execute someone else's trading plan if you don't have the experience, because you won't know how to implement it correctly. Okay. But anyway, folks, have a great day. I will likely be back tomorrow with another video if I have a pair or pairs and watch. If I place a trade, of course, I will update you with that as well and let you know how that's going or how it went. But for now, have a great day, and I'll speak to you again soon. Thank you very much indeed for watching.